You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Okay, welcome to the deep dive. You've shared quite the stack of timely sources with us today. It looks like a really detailed global market and geopolitics briefing. Gives us a great snapshot of the global flow just as Europe was opening up.
Yeah, absolutely. And our goal, well, it's pretty clear. Cut through the noise, basically.
Yeah.
We need to synthesize what's really driving the tape right now. Pinpoint those core signals, subtle central bank shifts, those frontline geopolitical hotspots, all of it.
And there is definitely a lot happening. We're seeing thin liquidity making moves seem bigger, especially with Japan offline for the Autumnal Equinox holiday.
Right. That amplifies things.
Gold is hitting fresh records, which is, well, startling.
Yeah.
And we have this cluster of really high-stakes diplomatic meetings going on, a lot centered around the UN General Assembly.
Exactly. It feels like a moment where even small signals, they could trigger some pretty big risk adjustments.
Okay, yeah. Let's unpack this there.
So if we start with the immediate money movers,
Yeah.
FX, it really felt like everything was just locked, waiting.
A holding pattern.
Pretty much. The U.S. dollar index, for instance, paused in this incredibly tight band, almost frozen. It tells you traders are, maybe priced for perfection, and they just don't want to move until they see what happens next.
Yeah, that stillness really says a lot about the uncertainty, doesn't it? It's that quiet before the storm, before the data hits. We know the big event risks everyone's watching. First, that full slate of central bank communication coming up.
Mm-hmm.
And second, those September Flash PMIs, purchasing managers' indices, those really key forward-looking surveys.
Right, from the Eurozone, the UK, and the US critical stuff.
Okay.
And while the dollar was paused, you could see these sort of subtle tensions in the other pairs. The euro's hovering right around 1.1800. Everyone's got an eye on that previous high, that resistance at 1.1848.
Right.
Sterling's also in a narrow range. They're waiting for their own PMIs and, importantly, specific remarks from the Bank of England's chief economist, Hugh Pill.
Ah, okay. So any surprise hawkishness from him could shake things up for sterling.
Could definitely push it out of that range, yeah.
But the dollar-yen, that actually broke lower, slipped right below its 50-day moving average.
It did.
Now, the briefing says this wasn't really fundamental, more structural, just thin liquidity from the Japanese holiday pushing it down.
Exactly. Low volume just exaggerated the move. It's a perfect example of how that works, especially when everyone's feeling a bit hesitant globally.
Okay.
But the real divergence, I think, was in Asia. We saw these coordinated but kind of conflicting central bank signals.
How so?
Well, in China, the PBoC, the People's Bank of China, they kept up their easing tone, set the yuan reference rate, the fixing, lower than the market expected.
Right, 7.1057 versus 7.1066 expected. Still signaling concern about growth.
Precise. Continued concern about domestic growth there.
Okay, but hold on. If China's easing, trying to stay competitive, why was India doing the opposite? The briefing mentioned the RBI, the Reserve Bank of India, was reportedly selling dollars through state banks to prop up the rupee. It hit fresh lows.
Yeah.
Doesn't that suggest totally different pressures, like inflation or trade worries?
It absolutely does. That contrast really highlights the different challenges in those two huge economies. China's dealing with, structural debt, cooling growth, so they need stimulus. India, though, might have stronger domestic demand, but critically, they're grappling with higher imported inflation. Think energy, commodities.
Ah, so that puts direct pressure on the rupee.
Exactly. They have to step in, manage that cost of living pressure domestically.
Right. Okay, that makes sense. And meanwhile, the Aussies and Kiwis, the Antipodeans, they softened a bit, dragged down by that China weakness signal.
Yeah, generally softer. Though it's worth noting, Australia's Flash PMIs, while they deteriorated, they did stay just inside expansion territory.
So slowing, but not quite contracting yet.
Right. And over New Zealand, there's still that chatter about potentially getting the first female RBNZ governor soon, which would be, quite significant.
Definitely a milestone. Okay, so that divergence, it leads us somewhere interesting. Seems like all this policy uncertainty is pushing money into safety trades. Let's shift to commodities. This is where things get really interesting, especially with gold just running.
Yeah, gold is the clearest sign of global anxiety right now. It pushed up again, fresh all-time highs, and importantly, the momentum really picked up after it broke through that big psychological level, USD 3,750 an ounce.
Wow. What does breaking a level like that signify?
Well, when gold breaches a big round number like that, it suggests it's not just about hedging one specific event anymore. It's more like institutional money is hedging against policy paralysis. This broader fear, maybe, that leaders are too caught up in domestic issues or diplomatic stalemates to manage the big global risks effectively.
So the gold spike is tied directly to that crowded policy calendar, the UN meetings, the geopolitical backdrop.
That seems to be the driver, yes.
But if gold's flying high on risk, why is crude oil looking kind of subdued? The briefing mentioned pressure from Washington pushing Europeans to stop buying Russian oil.
Crude seems to be stuck in its own kind of paralysis, but it's more anticipatory. People are waiting for more clarity, holding back before the big speeches at the UN General Assembly, and, crucially, that E3 meeting with Iran.
Right, the E3. Remind us quickly who that is.
That's France, Germany, and the UK. The three main European powers that usually coordinate on Iran policy, especially the nuclear file and regional stuff.
Got it.
So yeah, that meeting with Iran's foreign minister is critical. Any diplomatic misstep there, any new sanction threat coming out of that, or the UN generally, they could instantly change the supply picture and send crude spiking again.
Makes perfect sense. Okay, switching to industrial metals. Copper eased back, slipped below $10,000 a ton.
Yeah, linked pretty directly to those Chinese markets underperforming. It reinforces that demand weakness signal we saw from the PBoC's easing. But there was also some important supply-side policy news in the briefing, stuff that will matter for EVs, energy transition. Chile's Corfo, their economic development agency, they notified contract changes that basically pave the way for that huge Codelco SQM lithium deal.
Chile, the world's #2 lithium producer, getting more state control over a critical resource.
Exactly. That's a big deal long term. And China, on the other side, reiterated plans to tighten its own industrial supply. Stricter controls on steel capacity, banning any new additions there.
So we've got gold at record highs on geopolitical fear, contrasting with softer industrial metals like copper because of Chinese policy and cooling,
Right.
while the West tries to lock down new lithium supply chains. The market's really being pulled in different directions here.
It really is.
Okay, let's pivot now to the diplomatic chessboard itself, where global policies are really being tested. This is where we see things like trade tariffs, which, corporates often flag as modestly inflationary, running up against these high-stakes political moments.
Yeah, and trade relations are seeing this weird mix of friction and maybe de-escalation attempts. The White House confirmed the president plans to sign that TikTok deal later this week. That takes one irritant off the table, potentially.
Okay.
But at the same time, you hear signals from both Washington and Beijing about wanting to improve communication lines. Senior U.S. lawmakers stressing they want to keep talking.
De-risking, not decoupling. That seems to be the phrase.
That's the watchword, yeah.
We also saw that sustained high-level contact between the U.S. and India, India's foreign minister meeting the Secretary of State in New York.
Right. And that bilateral focus, it just underscores that it's not only about the U.S.-China relationship. The U.S.-India strategic partnership is clearly a priority, impacting regional stability, trade flows.
But geopolitics also brings these immediate, ground-level security risks. We saw that drone activity disrupting flights in Northern Europe, Oslo closing its airspace, Copenhagen halting operations briefly.
Yeah, that's not just a travel headache, it's a real security flag.
And it prompted that really strong statement from Sweden, didn't it? Reiterating their right to defend their airspace with force if necessary.
That's not just talk. That kind of statement directly feeds into a risk premium in those markets, adds to that general anxiety pushing gold up.
Definitely.
Then on the strategic level, the White House actually acknowledged Russia's New START offer.
New START being the nuclear arms treaty.
Right. The fact they acknowledged the offer, it confirms that, okay, strategic arms control is still a live channel. Maybe incredibly fragile, but still technically alive.
Which is vital, especially with so much focus now on the Middle East. The UN General Assembly is like ground zero for diplomacy this week.
For sure. Beyond the E3 meeting Iran's foreign minister is also talking separately with the head of the IAEA, the International Atomic Energy Agency, the nuclear watchdog.
Right. Any comment out of the IAEA could easily rattle markets.
Easily. And meanwhile, Washington is apparently getting ready to present its ideas to Arab leaders for ending the Gaza war. Reports mention things like a multinational troop deployment for an Israeli withdrawal, a funded transition plan.
That sounds like a massive diplomatic lift. Needs huge buy-in.
Huge. And finally, in Asia, those maritime claims are still a friction point. We saw that pretty strong joint statement. U.S., South Korea, Japan, all explicitly opposing unlawful claims in the South China Sea.
Reinforcing that trilateral security coordination in those critical shipping lanes.
Exactly. Clear signal there.
Okay, so all these threads, drone risks in Europe, fragile arms control, Gaza proposals, South China Sea, they all seem to lead back to Washington, don't they? So much global policy and market risk feels centered on the U.S. right now, both internationally and, well, domestically.
That's exactly right. You've got the president scheduled to address the UN General Assembly, meet world leaders.
Selling stability and U.S. leadership on the world stage.
Right. But while he's doing that, back home, the administration is locked in these tense talks with Congress to try and avoid a government shutdown.
With that September 30th deadline looming really large.
And that domestic risk, it's not just politics. It's a massive variable for markets and for the Fed, too. Everyone's waiting to hear from the Fed chair, other policymakers, looking for any hint on that growth-inflation trade-off, especially how, global tariffs, those uncertain energy dynamics we talked about, how they might feed into policy near term.
And a shutdown just throws this huge dose of self-inflicted economic uncertainty into the mix right when the Fed's trying to achieve this delicate balance.
That's precisely. Terrible timing.
So, okay, let's try to synthesize this for you, the listener. What are the core takeaways here from the briefing? FX seems frozen. Marking time before big data like the PMIs hit. That signals high uncertainty. Gold is soaring, new highs, clearly supported by institutional anxiety over geopolitical risk, everything from drone scares to Iran diplomacy.
High anxiety.
And critical commodity supply, like lithium in Chile or steel in China, is being actively shaped by government policy, creating these split trends in industrial metals.
Yeah, if you connect the dots, stability is just being tested everywhere at once. You've got localized security threats popping up in Europe, major strategic arms control just barely hanging on, and policymakers everywhere are wrestling with inflation from tariffs, energy shocks. The whole market story right now is just tension and divergence.
It really creates this fascinating and maybe critical contradiction we should probably leave you with. We noted strategic arms control is still just barely a live channel, a vital link between major powers. But at the exact same time, the U.S. is scrambling to avoid a government shutdown, which is an act of, domestic government's instability. So here's the thought. How much does the world's perception of a country's internal stability or instability, like facing a self-inflicted shutdown, how much does that undermine its leverage when trying to manage critical international stability issues? Things like arms control or those complex peace proposals for Gaza. Does the world really take a global leader seriously if they can't seem to manage their own budget process? Something to maybe mull over this week as those deadlines get closer.
Definitely food for thought.
Okay, thank you again for sharing this detailed briefing with us. We really encourage you to keep exploring these powerful and often pretty surprising links between what happens in global markets and what's unfolding in geopolitics.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.